Hello dear traders, this is Carl Dittman from www.carldittman.com. This might be one of the most valuable videos you've ever watched about MACD. Because today we're not only going to break down how the standard MACD in MetaTrader 4 works, we'll also show you an improved, clearer, and enhanced version that you can download for free using the link in the description below this video. If you searched YouTube for how to use MACD, this video is for you. You'll learn how the indicator works, what it reacts to, what signals it gives, and how to apply it in real trading. Let's start with the classic MACD in MT4. When you add it to the chart, you'll see signal line, calculated as the exponential moving average, EMA, of the MACD itself, usually a 9-period EMA. Histogram shows the difference between two other EMAs, a fast EMA, 12, and a slow EMA, 26. Now, in simpler terms, EMA, exponential moving average, is a way to smooth out price data to reduce market noise and make trends clearer. Unlike a regular moving average, EMA gives more weight to recent price changes. If something shifts on the market, EMA catches it faster. Imagine you're cooking pancakes. If you take the average temperature of the whole evening, that's a regular average. But if you focus on the last few minutes when the pan is heating up, that's EMA. The first EMA, 12, the fast one. Like a thermometer, it reacts instantly. The second EMA, 26, the slow one, shows the general trend. The third number, the signal EMA, usually 9, smooths the difference between the first two. Think of it as a filter. It removes the noise. Put simply, lower the first number, 12 to 6, 5, 3, and the indicator becomes more sensitive, catching even small price moves, but it might get noisy. Increase the first number, 12 to 15, 20. It reacts slower, but filters better and focuses on strong trends. Adjusting the second number, 26, changes the trend depth analysis. Higher equals smoother signals. The signal EMA, usually 9, controls how often the MACD crosses it. Lower equals more frequent crosses. Higher equals fewer, but stronger signals. Reasonable ranges for experiments. Fast, EMA, 5 to 20. Slow, EMA, 20 to 70. Signal, EMA, 5 to 10. Warning: two extreme settings might ruin the indicator's logic. How to read standard MACD signals. Buy signal, when the histogram crosses the signal line from below. This can be an early sign of an upward impulse. Works well after a pullback in a trending market. Sell signal, when the histogram drops below the signal line from above. This shows the bullish impulse is weakening and the trend may reverse downward. Trend slowdown. Histogram bars shrink gradually. This may signal that momentum is fading and a range or reversal may follow. These signals in the default MACD are often hard to spot visually. The histogram is gray and flat. You have to squint, and momentum isn't obvious. That's why traders need something easier to read. Now imagine all the same functions, but clearer, brighter, and easier to understand. Now, meet MACD Pulse. This is my improved version of the indicator, and it includes refined settings, 5, 34, 7. These are time-tested values that work well in most trending markets. MACD line, now it's visible. You can see the momentum, whether it's rising or falling. Signal line smooths data, filters out noise, and confirms signals. Histogram shows the difference between the MACD and the signal line. Green equals MACD above signal line. Red equals MACD below. The larger the difference, the stronger the impulse. Bright crossing points. Where MACD crosses the signal line, bright dots appear on the chart. These highlight key entry or exit moments instantly. With these colors and lines, you see everything clearly at once. No guessing. It's like a traffic light for traders, intuitive and fast. How to read MACD pulse signals. In simple words. Buy signal. The MACD line rises from below and crosses the signal line. It's like the bulls, buyers, start beating the bears, sellers. The histogram turns green and grows. A bright dot appears on the chart. That's your entry signal. Sell signal. The MACD crosses the signal line downward. The market shows signs of reversal. The histogram turns red. Pressure from sellers is increasing. A bright dot appears, helping you spot the move. Trend slowing. Histogram shrinks, lines come closer. It's like a car losing speed. It's better to wait before entering. If you like this logic already, don't forget, the download link for MACD Pulse is in the description. It's free, and you'll get a ready-to-use tool. What is divergence? In plain language, imagine you're driving and see a rock on the road ahead. But in your rearview mirror, everything looks smooth. Something's off, right? That's divergence, when price on the chart goes one way, but the indicator tells a different story. In other words, the chart says, we're going up, but the indicator quietly says, we're running out of steam. Examples. Price makes a new high, but MACD is lower than before. Bearish divergence, market might reverse down. Or the opposite. Price hits a new low, but MACD is higher than before. Bullish divergence, possible reversal upward. These mismatches act as early warning signals. When others are still asleep, you're already alerted. Why is this important? Because divergence gives you the earliest signs of a possible trend change. It's like radar. It's your secret edge. And on MACD Pulse, divergences are super easy to spot, thanks to the color-coded lines and curves. Now I'll show you 4 examples, each highlighting different aspects of divergence. These divergence examples are already marked on the chart. Example 1. Bullish divergence. Price drops and forms a new low. At the same time, MACD's low is higher than the previous one. The indicator is saying, yes, price is falling, but sellers are running out of steam. It's like a cyclist climbing a hill, still moving, but barely. This can be a sign of an upcoming trend reversal upward. Example 2. Clear bullish divergence. Price makes a second low even lower than before, but MACD shows a higher low. That's a loud signal. Time to turn around, and sure enough, the market rises right after. Example 3. Bearish divergence. Price hits a new high. Everything seems bullish, but MACD doesn't confirm it. It's lower than before. This means buyers are getting tired, like someone pushing a door that's barely moving. A reversal down often follows. Example 4. Hidden bullish divergence. Price falls and creates a new low, but MACD stays level or even slightly higher. This says sellers aren't really in control anymore. Despite the price drop, the market is ready to turn up. These signals help you spot reversals early and enter before the crowd. To start using MACD Pulse in your own trading, click the link in the description below the video. Install the indicator in your MetaTrader 4 terminal. Open any asset, Forex, crypto, stocks. Watch for histogram changes, crossovers, and divergence. Add RSI or support/resistance for better confirmation. Start with a demo account. It's safer and helps you learn. Important, MACD Pulse is not magic. It's a pro-level tool that gives you a visual edge. You make the decisions, but now with more clarity and confidence. If you want more strategies, tools, and my custom indicators, subscribe to the channel. Hit the like button. Leave a comment. And don't forget to download MACD Pulse using the link below. See you in the next video. May every trade you take be sharp, and every entry intentional. This is Carl Dittman signing off.